Hi everyone, welcome again. As usual, I'm here to share with you my views of the market, both technically and fundamentally. And we will start taking a look at the calendar and see what we have for the coming days. To be honest, there's a lot going on in the market, and macroeconomic data is doing little for currencies. Most of what we are seeing is being driven by sentiment, right? The negative sentiment triggered last week by the scandal surrounding Trump, and the improvement of such negative sentiment by the end of the last week is what's still ruling the market today. Nevertheless, the most relevant thing is that the greenback remains soft, okay, unable to find demand against any of its major rivals. And today's data release in Europe supports further euro gains. We have really strong preliminary flash, whatever you want to call it, PMIs in the region. I do believe that, if I'm not wrong, the business confidence index in Germany has reached an all-time high when printing 14.6 earlier today. So overall, this scenario still continues to favor selling the greenback. Okay, there are some minors reported later today. Sorry, that will affect the greenback. PMIs are on the top of my list because, given that the latest figures that have been coming from the United States have been generally softer than expected, not enough to suggest that the country is entering recession, nothing near that. But anyway, the softer numbers have backed the ongoing dollar decline, and therefore, if today numbers, particularly the PMI ones, came below expected, then we should expect further dollar declines. Ahead of the week, there's not much more to take care of. We have some central bank speakers, Kuroda and Draghi, both tomorrow. But to be honest, I don't expect them to surprise us with a change in their usual BS, right? Bank of Japan governor is confident that they will somehow reach the inflation, despite figures in Japan are generally discouraging, while Draghi will retain the dovish tone about not time to retreat in the QE, despite that inflation particularly are moving towards the upside in the euro area, right? Canada will also have its monetary policy meeting. I don't expect any much of a changes. I guess the market will be see for the statement and the press conference, if there's one, before taking any decision. But of course, as I always say, news involving commodity-related currency are usually very limited towards those currencies and hardly had an effect on the rest of the market. Okay, the 4 minutes to be released tomorrow afternoon should not bring anything new either to the markets. We know that the Fed is in the path of rising rates 3 times this year, already did one. The market has been rising odds of a June rate hike lately, right? But that all somehow decreased with the political turmoil we have last week. Nevertheless, will be looking for that in this particular minutes, any kind of clue that suggests or deny a rate hike in June. Just remember, most of that is already priced in. The market may have diminished a bit their bets, but still are well above 50%. Therefore, unless we really have a strong signal, I'm not expecting strong dollar gains with the minutes. Okay, let's see in June what happens. Thursday we have Europe in a holiday. The OPEC is meeting. I do believe it's a relevant event because of course, to oil markets, you know that there has been a lot of talk in the States about the possibility of OPEC extending their output cat deal. Of course, the extension is pretty much confirmed. The remaining question is whether they will extend it for 6 months or 9 months. These past few days, there were a couple of countries, such as Iraq and Kuwait, that don't back 9-month cut, as Saudi Arabia does. But anyway, attention will be there. If the CAD extends for 9 months or more, gold oil may find a bit of support, but if they just announce a 6 month extension, then we will probably see a sharp decline in oil prices. Okay. Anyway, preliminary GDP in the UK seems a bit more relevant. Not expecting much of this. 0.2% is I believe it's a second revision. I believe that we already have this number. Anyway, not expecting much of this unless we have a strong deviation for that 0.3%. Growth is slowing and we know it. But market attention when it comes to the pound will remain centered in the upcoming elections and Brexit, which for me are the main driving forces for pound movements these days. I'm not sure if this data will be able to move it unless we have a shock, right? Either up or down. Anyway, going through GDP second revision, if I'm not wrong, of the first quarter year GDP, right? Will be released on Friday. This is usually the less relevant one because we have the first estimate last month, sorry. This is the second revision, and we will have the final reading in a month. Okay, so this is the one that usually affects the market less. But anyway, given that we have a 0.7% in the initial estimate, and any upward revision to this should support a bit the greenback, but a negative number will probably send it plunging across the board because, as I always said, when data supports the trend or comes in line with the trend, the effect is much more relevant than when the data is against what we are seeing in charts. Okay, durable good orders, it's also relevant. Okay, we have upward revisions to March numbers. We are going to get April ones. Still, they have been quite soft over the past couple of months. So beware of it. Beware of this being another soft and disappointed figure coming from the US dollar. Anyway, as both will be released at the same time, I guess we will have to give the market some 30 minutes to digest the news and then see how it will continue. Okay. Anyway, jumping to my charts, which I love, love, love. And here we are with euro dollar, flirting, sorry, with recent highs. We have traded as high as 1267 so far today, surpassing previous weekly high by a few pips. Still, I see no much momentum in the market. I'm seeing a lot of gains in equities, quite a surprise. But currency is pretty much flat. I guess the market is looking for a better clue on where to go next. Even the high we have reached today it has been reaching before the release of positive European data. So beware of that. Okay, beware that a bit of a probable downward correction underway if a pair is unable to advance further. Anyway, my first target and resistance is 12.99, which is pretty much 113 because if a high we saw last November as an immediate reaction to the US election result, okay? Trump victory firstly sent the dollar plummeting, then soaring, right? Anyway, 113 is the immediate resistance. Above that, the next one comes between 1340 1350, and if somehow the pair manages to settle above that area, I will change back to my weekly charts and show you this area around 1440 1450. If you see the chart, you would see that the pair has been rejected from the level since early 2015. We have a couple of spikes surpassing that level, but this is the tops for the euro dollar. This is like a huge line in the sun. I do see the pair reaching this level, and I would like to review the future or assess the future after seeing how the price behaves around this area, right? But mostly, I would expect some selling interest, some strong selling interest, keeping the pair in check around this level, at least at the first attempt to break it higher. Anyway, back to these days. The pair has yesterday's low around 1160, which is the first support for me en route to 1080, the area that attract buyers by the second half of last week. Below that level, then the corrective movement could be deeper. See the pair approach 110, but at this point, and as dollar weakness persists, I do believe that approaches to 1080, 1120 will probably attract some buying interest. Okay, but I also suspect stops below that. So that's what I'm considering a probable stronger correction on a break below it, right? When it comes to the pound, I see the pair trapped, it's trapped between dollar weakness and the absence of pound demand. The market is not willing to risk ahead of the election, ahead of the Brexit, neither today with the terror attack that the kingdom suffered yesterday, right? Uh, Not seeing much of a trend going on in here, despite we are holding near 130 and it's the highest for the year. The upward potential remains well limited. Daily chart, 4-hour charts, all I see is a neutral momentum in the pair, right? And so I myself prefer to stay aside for me. I guess we can get a bit more action closer to the elections for the first week of June, but honestly, not waiting for much. There's a strong resistance at 130.60. The pair topped a few pips below it this past week. So that's a level that we could consider in the case we want to wait for a bullish breakout. 130.60 is for me the one. 31.20, 31.60 comes next as probable bullish targets. Not betting too much in an upward extension in here. I still fear the consequence of Brexit rather than elections. Okay, the verbal battle between the Euro area Commission, sorry, and UK Brexit Minister and Theresa May struggling about the divorce bill, right? It's a huge rock in the pound's neck, and I'm not seeing much of an upward potential as long as that remains unsolved. Okay. Anyway, to the upside, we have a really short-term support around 59.50. If that gets taken, 29.20 comes next. Below that, 128.80, and below that, this low around 28.30, which is for me the most relevant. In between this level and 30.60, for me the pair is ranging, so approaches to this low, and although I don't believe we can see them this week, will probably attract buyers. Okay. Anyway, as for the dollar Japanese yen, there's a clear neutral stance in here, right? Ever since the week started, we have seen nothing but the pair hovering around this 1120 region. Is the 50% retracement of its latest bullish run. We have the 200 simple moving average, the brown one there, flat also. No direction coming from moving averages, so neutral, but still bearish, right? I don't see any much of a chances of a dollar demand growing, not even with the June rate hike pending. Therefore, that suggests that the risk is towards downside. I have a short-term support around 1090. Below that, this relevant low around 1020, right? And below that one, 109.90, it's a huge one that if it gets broken will probably be prepared to close this gap, which is currently at around 109.20. To the upside so far, 112 has been capping the upside, right? We are not even closer to that level. Bearish pressure keeps back. So unless we recover above that level, there's little to do towards the upside above 12. Then I could see the pair advancing modestly, but not much. 12.50 and 13.10 are my next bullish and probable targets. Okay. And you'll see it's a bit more interesting today. I have this daily descendant trend line coming from the yearly high post in March around 77.49. and it has been broken this week. It has been broken on positive sentiment, right? The recovery in equities is what's actually backing the Aussie recovery. So there we are, moving higher, breaking, pullback, advance, higher highs. Everything is telling us that the rally may continue. The pair is currently struggling with 0.75, a huge figure, but if it manages to hold above it, there's a good chance that it will extend up to 76. 76, 77, 40 has been a strong consolidative range for long, quite long earlier this year. So 76 is the base of that range and the probable bullish target for the coming days, right? Also, without momentum, I guess the market today is a bit uh, worried, right? I can't find the correct word, but while unfortunately terror attacks don't have a big effect on the market lately, uh, you can see that the market's reaction is this one, staying one step aside. It's like everyone is feeling the sadness and unable to take a decision when it comes to investment. Anyway, there's a lot of headlines coming and things pass quickly in this life. So therefore, maiden action will resume later today in the US afternoon when we have a bit of more relevant data coming from the US. Um, Gold remains positive. We have a pullback uh, last week. It has handled to recover some ground still. Upward momentum seems to be fading, right? Take a look at the daily. I was taking a look at indicators today that are losing the upward stance, sorry, but still within positive territory. But I'm also watching here is that moving average are pretty much horizontal and the 20 and the 100 converging. That's usually a sign that there's no clear direction in the market. Uh, as long as risk aversion remains subdued, the commodity has little chances to rally because the market will probably weigh more the possibility of a rate hike in the US next June. So therefore, as long as the possibility of a rate hike is present, gold gains will only be a result of a peak of risk aversion and nothing else. Short term, chart. As I was saying, the momentum seems to be fading. There seems to be some support around 56. So I would say that below that level, 56, sorry, we can go down to the 45, 50 area. For me, this is a strong static support. If you take a look at longer time frames, bigger time frames, you will see that the price has stayed around this area plenty of times over the past. So this is a probable bearish target in the case of a break lower. And to the upside, the commodity has stopped at 65, right? 64, 64.95. Well, it's the same. Above that level, 73 is my next target. And above that, there's a strong resistance around here, 87, 88. So that's the main bullish target in the case, an eventful, improbable case of a bullish extension, right? And when it comes to oil, we had a small setback today, but still trading mostly positively. The setback came with news that Donald Trump, is trying or would try to sell half of the country oil reserves and even tried to explode oil in a reserve in Alaska in a protected area. So as a plan of a batshit cat, right? Uh, the news, the headlines were big, but the fact is that that needs to go to the Congress, and there are little chances that that will happen, right? Anyway, it's what's leading oil prices a bit today. But we have the OPEC meeting also. What I was saying earlier about the output can extension, and the OPEC and non-OPEC countries will have a meeting in Vienna next Thursday, right? So the market is waiting for that before taking strong positions. Anyway, Later today, by the end of this session, we'll have the APES crude report. Tomorrow we have the big one, the AEA one. And if that comes again with a drawdown and your PEC cuts 9 months, then that's the scenario required for see an advance in prices. Okay. Anyway, the levels I'm watching are firstly this high around 51.40 and then advance up to 52.50. It's quite a probable reach target, this one. And gains above this one, I do see them temporal. So beware of that. Beware of a break above this level, that being better a selling opportunity rather than keep on buying, right? We have topped right around 53.80 earlier this year. So I would say that approaches to the area could be a more interesting selling opportunity than buying one. Okay, unless of course we have huge positive news coming from all fronts, but still unsustainable gains beyond 52.50 for me. Below 50, right, it's the level to watch. Below 50, then the commodity will probably correct lower. 49.30, it's the first level to watch, followed by 49, and below that I do see it falling down to 48.20, 48.48 area. Okay, those are the levels I'm watching today. Anyway, remember the market, it's take a look, right? Not much action going on, very slow movements everywhere, some consolidated stage waiting for a trigger. Be cautious today, guys, because we are not sure how this will explode, but it will. Anyway, thanks for being here. Thanks for sharing your time with me. And hopefully, see you back next week. Okay? Thank you and bye bye.